it's fair to say business credit card stacking and the baseline of business funding for entry-level businesses is coming to a close. It is going extinct. Basically, most business funding strategies have been wrapped around stacking high-limit 0% business credit cards to function as working capital or a form of capital to expand or scale until you get to a point where your business is fully lendable and you can go full documentation into regular lines of credit, corporate credit cards, etc. But for many of us, hundreds of thousands of businesses around the country or more, we've needed some kind of, shift in the marketplace that would allow us to get really decent amounts of capital at low cost, reasonable enough time and terms and time frames to allow us to get our projects off the ground, our businesses off the ground, that initial cash injection needed to get operational and grow things to a point where you could bring in revenue and start showing documentation. Business credit cards with a couple tweaks and a couple bolt-ons have filled that gap. That having been said, now in this current economic climate and the overall shift in the banking and lending space, defaults and things of this nature, fraud, a lot of fraud, that is starting to fade away and honestly go relatively extinct. Business lending is shifting. So what we're going to cover in this video is, some of the changes that are coming along. But as always in these live streams and any video, we're looking to bring solutions or alternatives, pivots. So I want to cover, it's probably going to come off to some of you as like, if you're in the funding and credit space, it may come off as a bit brash or risky, whatever you want to call it. But I'm going to come to you with a potential proposal or pivot that, it may be time to shift from business funding to personal funding to graduate to the documentation phase and the fully documented, fully lending phase for your business. And I'm going to break this all down in this live stream. So I'm filming this significantly later than my normal scheduled time. I had a really rough evening with a motorcycle accident. So off base on timing, but the show must go on. I was going to still show up for y'all as long as I was physically able to. So, hopefully most of you, my regular pioneers and any new viewers will catch the replay of this because as always, I'm going to bring tremendous value in this video and bring some support. I appreciate y'all that are coming in, liking, subscribing, and, making sure y'all leaving y'all comments in the building. So it's good to see y'all. I appreciate the compliment. Thank you. So let's get into some of the highlights of what makes business credit funding and business credit cards so appealing in the first place. I got a couple notes that I'm going to read here just to give some context on what we've been attracted to when it comes to business funding that will allow, or business credit cards in particular, that has allowed us to get our businesses off the ground and get started in the first place. So the first thing that comes to mind when you think about business credit card stacking is no documentation. It's the first lending option in the business funding, business lending space that does not typically require documentation. So that's the first thing right out of the gate. Next thing, you typically don't need collateral. Another big one. Most of us, again, don't have these things going on. So no doc, typically, no collateral, typically stated income. Because it's no doc and it's not typically the way the application is structured. Typically, it's going to be stated income, which is also helpful. There's some flexibility in what you can report as income or revenue and projected revenue when it comes to your business. So it can be very helpful. Hidden from personal credit, very important as well. Because these are business credit cards reporting under the EIN of the business, unless you're in a default or late payment scenario, you're typically not dealing with this reporting to your personal credit, historically speaking. Because of that reason, the next benefit is you get to maximize the limits. You typically get higher limits with business credit cards. And because of that, you end up getting the ability to max out those limits because they're not reported on your personal credit, and business credit typically is hidden or has historically been hidden and doesn't always count having a high utilization against you in the same capacity. So it's allow you to get higher limits once you crack the code, and you can actually use the bulk of those limits. So the next thing is the lowest barrier of entry in business lending or funding for the reasons that I just named before. No doc, no collateral, relies largely on personal credit and a properly structured business. And this has made this a very, very good sweet spot, especially at 0% when you're able to tap into these and the new modifications that have come along in the last 5 to 7 years that allows you to actually liquidate them at 0% and get real cash. So business credit cards have been a godsend. I think we can see that, you know, for those of us that have been in the lending space and the business funding space long enough and experienced these things, they've been a tremendous value add for us. You know, they can help you manage cash flow, interest-free financing for large purchases, consolidates high interest debt if you need to, helps build business credit. You earn massive rewards when it comes to business credit cards, separates business from personal expenses, so it's better for the books, and is important considerations and potential drawbacks. That's what we need to get into and the shifts that are coming in the business lending space. So we have a pretty good idea of, you know, what the benefits of these cards are and have historically been, right? And any of y'all coming into the live stream, make sure y'all like, leave y'all support, you know, leave some emojis, leave some in the chat, you know, productive, let me know. So basically we have a scenario where the landscape's changing. Business lending is changing, the banking space is changing, and the benefits that I just read off to you are shifting significantly. They're shifting because let's just start back from the top. If we look at business credit cards right now and go back at the no doc portion of it, that's starting to change, especially with some of the big banks that have been targeted for these programs, right? The no doc programs have been historically, especially by funding companies, have been really ran through the top, you know, a lot of times the top 10 or 20 banks in the country by size, for the most part. There's some exceptions. There's some PNCs and some Truists, but, you know, there are more regional, super regionals. But it's really your Chase, Bank of America's, your Wells Fargo's, your US banks, you know, like these larger banks, because funding companies are doing these things remotely via phone and internet applications. And these banks are the large enough entities to conduct those type of application styles, allowing funding companies to be the middleman. So no doc is starting to change. The financial institutions that have been the most popular, especially for these business credit cards, these high limits, etc., are now, like the Chase Bank is a prime example, and other big banks are starting to follow suit. They're now digging deeper. They're no longer taking just the projected income and great credit at the end of the day. So basically, what you have in this scenario is Chase banks, American Express, they're starting to question things on the onset with these cards, or shortly after you get them and start to use them. So you're running into a scenario where the no doc thing is starting to fade out. And if you've been in the funding space recently, you've known the last year or two has been getting tighter and tighter. A lot of defaults, a lot of fraud. So those two things are creating an environment where banks are starting to issue out basically capital punishment, or at least broad scale verification and authentication. And they're starting to ask for more identification. They're starting to ask for some form of, not necessarily financial documentation, but they're starting to want bank accounts linked. They're starting to want to see indications of cash flow. You know, they're asking for more identification for yourself and for the business. So the application days where you were getting 15, 20, 25, 30, $40,000 at one time, you know, just strictly off of the application by itself with no additional documentations, questions, or requirements, is starting to fade behind us, especially with bigger banks. No collateral is still the same. Stated income is getting sketchy because, again, these banks are starting to really tie into cash flow funding or cash flow underwriting, So they're looking to really tap in to see, the projected information that you're putting down around your revenue on these applications, is there any indication that real cash flow coming in? That's what's starting to happen. So the stated income thing is starting to fade away. Hidden from personal credit, starting to change. I don't know if y'all remember the Chase glitch earlier this year, in March of this year, where Chase incidentally or accidentally started to report business credit cards like overnight on personal credit reports. When you are applying for business credit cards and putting them to use, they're getting reported to these various bureaus and, you know, other systems that these banks are using to do background checks and banking checks. And so it's not necessarily always popping up on your personal credit, even though Chase Bank leaked this earlier this year in March. But what you are starting to see is that these banks are still finding ways to find out. I shot a whole video about Bank of America denying me for a business credit card late last year because they're checking, you know, the LexisNexis and they're getting these business credit reports. They're getting around the hidden component of business credit card usage and business lending products. So it's being demystified, basically. You're running into a scenario now where it's either starting to pop up on your personal credit, and if it's not popping up on your personal credit, it's still showing on business credit reports and other areas where business credit report information or business credit information is being reported and getting you denied anyway. If you have a high utilization, it's starting to have the same impact. Thank y'all for liking as y'all come in. Good job. Good work. So you're running into the scenario where that major caveat is pivoting, is changing. So the max limits, because of the separation from personal credit, is going out of the door, right? Because it's reporting now. It's starting to report on these business credit reporting agencies. These bigger banks are starting to pull LexisNexis and pay for that data. They're starting to report it on your personal credit. So you no longer have the ability to max these cards out like you used to. Not to mention, you've always had to be careful with it because once you're over about 50% on business credit cards, it's hard for you to get credit limit increases or new business credit cards with the banks. So with those things changing, it's no longer showing itself to be that, you know, low barrier to entry that it once was. And because of that, it's almost becoming as difficult as if you were applying for a full-scale line of credit or a term loan at the bank. It's getting close to that. So my proposal is to start considering, if we're losing the benefits of high, business credit limits at, 0%, that's hidden from my personal credit, hidden away in these business credit reporting agencies that don't get pulled very much and kind of hides under the radar, allowing me to max it out for long periods of time, months at a time, until I get everything capitalized and, operational in my business and can start paying it back. If that's going away and you're back down to a scenario where it's almost like personal credit funding, the question comes in, is it time to start pivoting to personal credit funding? So for those of you who may be critical of this idea and thinking, oh, that sounds crazy or ridiculous, hang with me for a second. Because again, I just laid out a list of legitimate real world scenarios where the benefits of business credit cards and business credit card stacking as a working capital source or initial cash injection is fading away. It's no longer anonymous and behind the scenes. You no longer can max them out and keep them maxed out for long periods of time. Banks are getting leery. They're getting more concerned about that. They're requesting documentation, threatening to cut limits. I know you guys heard about Amex doing this a lot. And the no doc part is starting to fade away. There's a lot more authentication going on. So they're doing more cash flow. They want linked bank accounts. They want to see cash flow and activity to see if you're not only a real business, but an operational business. So if that's the case, then the levels of hoops and the work that you have to do to even get in the game and play the credit card stacking game on the business side is losing its appeal. It's really losing its appeal. So you're running into a scenario where it's like, damn, am I better off just stacking personal credit cards? Because it's a lot less work. It's a lot less work. And if you're not one of the problems with personal credit cards, when we look at it historically, the limits aren't usually as high because it's not designed for the same purpose. The utilization component is very impactful on your credit. So if you did get $20,000 on a personal credit card, historically, it's nothing compared to $20,000 on a business card because I can use the full 20 on the business card or liquidate and use the majority of that 20. On a personal credit card, you tend to be in a scenario where you might only be able to use 20 or 30% before you end up in the red on your utilization. So a lot of concerns there. And basically this leads to, shout out to you, JWD357. Glad to have you in. Glad to have you subscribe. Definitely a ton of value on the channel. So glad to have you in. If you're looking to get focused on business funding, business credit, personal credit stacking, other financial strategies to, build out and get our hands on businesses and grow them, real estate funding, etc. A lot of things we cover on here. So good to have you in. Y'all make sure y'all leave y'all comments, chat, put y'all emojis up, show y'all support, super chats. If you want your questions read or some answers or questions answered on the live stream, if you leave a super chat, I got you. So to get back on track with this, personal credit cards and personal credit card stacking is starting to look more appealing because I don't have to set up this perfectly structured business entity, which often takes capital and time. I am in a position where it's already either starting to report on my personal credit or it's showing up on these business credit reports, but it's starting to get pulled more. So I'm not able to hide it as much. And I'm also not in a scenario where I can use as much of the capital as freely. So a lot of the benefits that separated business credit card stacking from personal credit card stacking is starting to fade away. It's not completely gone, but it is starting to fade away. So we have to ask ourselves, is it still worth the effort that it takes to even get successful business credit card stacking campaigns off the ground? To really get to that 75, 100, 150 plus mark takes work. I've been there, marked a couple times over. You got to really build out a decent business entity. You got to structure things. You got to set up banking relationships, run cash flow through. You got to polish your personal credit. You got to align certain things. Like you got to really set yourself up for success when it comes to business credit card stacking as a working capital source. So if you're going to take the risk of using business credit cards as the capital source in the first place, business credit cards are losing their luster as this, really effective, hidden, low-cost way to get in hidden way to get in on the business lending side. So the goal with those has been to get that initial cash injection, working capital injection, and let that lead you into an operational business, a cash flowing business that can build documentation and eventually go back to the banks in 1 or 2 years' time and actually get real funding from that point. For those of us that are legitimate, some people have just been getting business credit cards and running off and trying crazy stuff. But for those of us that are sensible, legitimate, and prudent, that is what we've been doing. Using this to get that capital injection that we normally wouldn't qualify in any other way to get our hands on at scale, and allowing it to get our initial businesses off the ground. And then from that point on, we get sales, we get revenue, we can document it, we can do our bookkeeping, get the accounting documents done, the financials done, go back to the banks and get legitimate funding to wipe out those credit cards before they start to cost us a nominal lead, and get legitimate funding and look better in front of banks, et cetera, et cetera. That has been the roadmap. If that's the case, business credit cards stacking has lost its luster, it's losing its luster. Now the question comes in and says, is personal credit card stacking now looking more appealing and sensible? So the answer is yes. It's yes. Personal credit cards are starting to gain appeal as an option for a working capital injection into your new business. They're gonna be easier. They're gonna be easier because you don't have to set up a full business. And not that you don't need to still set your business up if the goal is to capitalize a business, but you don't need it for the personal credit card applications. There's still no doc. There's still no income verification. Now, mind you, these same banks are getting tighter on credit card applications on the personal side as well. Don't get it twisted. But it's not as strenuous or as much to scrutinize as business credit cards. They're just looking at you. So as long as you have a good job or a stable income or you have a household income, you're good. Business credit cards, they're starting to test out the business's legitimacy, the formation, the data points of the business, potentially linking bank accounts of the business. Like they're digging into a whole, on top of scrutinizing you, they're just scrutinizing the business as well. So what needs to be identified in this scenario is, if that's all the case, then I can go in on personal credit cards. I already can't use my business credit cards to the max, or it's less likely that I can effectively without hurting myself. So if I'm already limited to 30 to 40, 50% use case on the business credit cards, the barrier to entry is way higher and more strenuous on the business credit cards. And banks are getting more leery and the standards are getting high. I shot a live stream and videos around how the SBA is getting tighter. The SBA sets the tone for the private business lending market. Good job leaving y'all likes and y'all supporting y'all chats in there. Good job, good work. I'm gonna get to a couple of these chats. If you have questions you want answered, super chat me and I got you on the questions. So I appreciate y'all. If you want to get your questions answered and really get the opportunity to get a business banker's insight, for those of you who are new, I'm actually a business banker. When they talk about these funding companies are like, oh, I'm gonna plug you in my business banker or my RM and such and such. That's what I do. So if you want an opportunity to get your questions answered or get a little better insight, super chat me and I got you. Other than that, I appreciate y'all coming in. I acknowledge y'all at least coming in. So personal credit cards are a pivot or an alternative that may make sense. Cool. Why? No doc, less verification, lower barrier to entry, still reasonable limits if you do your relationship banking right and your personal profiles right, and still great 0% windows. And believe it or not, an advantage is it's easier to balance transfer, and there's a lot more card options on the personal side. Think about it. It's a lot more card options. Business credit cards are a slimmer pool at every bank. If you pay attention, the really big banks have a decent amount of options, but they still don't stack up to how many personal card options they typically have. Chase and American Express, Bank of America are like an exception, like your top 5, top 10, top 15 banks. But if you broaden out to like the hundreds of institutions that offer 0% credit cards, you will quickly find out that they may have like 1 business credit card or 2 business credit cards, but there's 4 or 5 personal credit cards. And so when you have so much scale on personal credit cards, when you get in a bind where you haven't fully paid them down or you haven't gotten that income back and you're carrying that balance on a personal card and it's getting to that risky window of time, you have so many more options to balance transfer and get up out of there on the personal credit card side than the business side, especially with the tighter underwriting, right? If I'm maxed out on my business credit cards or I've used a large chunk, the banks that I'm at are already leery, so I can't move things around and shift it there. And the banks that I'm going to that are outside of it no longer are, taking the light applications and just taking it at face value. They're digging into those other relationships I already have for the business credit cards. They're looking at the LexisNexis and the other business bureaus and seeing those balances. So now they don't want to take a chance on you. So you stuck. I've witnessed this. Like, I'm doing this on a regular basis as a business banker, and I've damn near been in this position myself as working capital in recent times as I've done business credit card stacking firsthand. So you end up stuck, right? So personal credit cards actually have the advantage. The disadvantages they have closed in on business credit cards. And they have one advantage that nobody really talks about from personal credit cards to business credit cards. And that's that there's a much bigger pool of personal credit cards. You can go to much smaller institutions. You don't have to do that big 10, big 15, big 20 like you do with business credit cards. You will notice that almost every funding company runs you through the same credit, same business, same banks. I don't know if any of you have any real experience and know, chat below, but most of these funding companies that are out here are running you through the same 15, 20 banks. You watch the videos when they put content out, you actually sign up with them and they run you through the same ones because the only way for them to middleman is to do it with the institutions that allow these applications online and allow you to call in anonymously by phone for reconsiderations and stuff. That's only the big banks. You're not going to be able to do that with the mom and pops, the community banks, the local regional banks that are only in a couple states. They're not going to do none of those games. You got to go in person to apply at most of those institutions. Most of them want you to come in, or they do a lot tighter verification on making sure it's you. Y'all make sure y'all continue to like and leave y'all chats in here. So the advantage changes dramatically. I just love business cards as they make life much easier and it reduces stress versus personal credit. If correct me if I'm wrong, and that is TechViva. So what you were saying, TechViva, is correct up until what I'm pointing out right now, that business credit cards are no longer as anonymous. They're no longer as separated. I don't know if you knew about the Chase glitch earlier, where they literally reported a bunch of people's business credit card uses on their personal credit report for like a month, crashing people's credit scores. And they claim it was an accident, but was it a test? So you have LexisNexis getting pulled. It may not always be, it's not getting to the point where it's broadly reported on the personal credit, but that separation is shrinking. The verification is getting heavier. And your ability to max out the limits on it and carry those balances is getting harder because banks are getting leery. There's too many defaults. There's a lot of fraud. There's not legitimate people like you and I doing real business. There's for every one of us, there's 2, 3, 4, 5 of these jackasses out here trying to manipulate the system and running off with the credit and the funding, and never paying it back, or putting in completely fraudulent applications. It's not even real businesses. So we're taking a toll for that. So what you said in the chat is true up until recent times. If you have a fully legitimate, documented business that has revenues and cash flow, and that bank that you're banking at with that information is seeing that, you're probably not going to run into many issues. I'm really covering this for the brand new businesses or the ones that have been around for a little while, but just don't have steady books, don't have everything documented yet, and they still need access to that cash, which is a lot of us. Again, I'm a business banker. I see them all the time. And it's not because they're not legitimate businesses. It's just damn hard out here. The economy's tough right now. Rates are higher. People, discretionary income spending is changing. So if your business is dependent on consumers and their spending, it's changing. Business to business, interactions are changing. So industries are crunched right now. So a lot of businesses are still struggling to get real revenue in consistently and be able to present that to banks that are getting more leery and get access to quality funding at high enough levels where it's useful at low cost. Does that make sense so far? Y'all let me know in the chat. Does that make sense so far? JDW is like, I agree. I'm guessing you saying you agree on a personal credit card, being an option, stacking being an option. So, couple perks and benefits like we talked about. Make sure y'all see a good bit of y'all coming in. Make sure y'all leave y'all chats, like the video, support it so I can continue to push this out to more people who need to see it. Make sure y'all like as y'all come in. So, as I just discussed, much broader basket of personal card options to move around and spread it out with. I got access to more cards. So even though I may not be able to get the high limits that the business funding, once executed properly, may allot me, I got access to more cards. So that's one component. The barrier to entry on applications is lower because it's just me. There's not a whole business to scrutinize. That's next. The next scenario is these funding companies, if you guys are leaning in that direction, still will help you a lot of times with personal credit card stacking, as long as it's a bank at the size. Good job leaving y'all likes. As long as the bank is the size that they can do their business operation with, which means apply online and call anonymously or as a part of your business during reconsideration processes, right? So very important to understand that personal credit cards are closing in as a very respectable option. And the goal, again, is not to be reckless, irresponsible. Get the cash injection and deploy it into your business, get revenue going, and keep good books so you can, good job with y'all likes, good job. So you can get this in front of the banks and get legitimate funding to take out that personal credit, as in get a line of credit to cash that in and grab that and buy and pay that all off and pull it back on the business side responsibly and then grow things out from there. But that's a long road for some of us who are like in the early phases of our business or in a point where our businesses have not successfully gotten that cash flow generated yet, right? So it's very important for us to understand that personal credit card stacking could turn into a viable option for you if you're new or you just have not gotten to a documented lendable phase with your business yet. So what does that look like? Relationship banking is going to be essential. It is for business credit card stacking, and the same rule is going to apply for personal credit card stacking. You're going to need to set up very strong, healthy relationships with the banks you're going to try this with. The gift is you only have to do that on the personal side. You don't have the responsibility of doing it on the personal and business side like you do for business credit card stacking. Yes, they will teach you to set those business banking relationships up and stage them appropriately for a window of time so you can have successful business credit card stacking. But honestly, you usually get more results doing personal and business with these institutions. Some of them in occasions will force you to have personal relationships and business relationships. So you don't have to worry about all that with personal credit card stacking. You set up a good personal banking relationship, checking account, some direct deposits coming in, decent inflows, decent spending. Maybe you set up a savings account, drop some decent cash in there, and you can set up a decent relationship with a bank in 60 to 90 days on a personal side with some base level activity with lower dollar amounts. Those of you who may not know or may not be familiar, or if you are, you can attest to this. With the business banking relationship plays, you're doing 4 and 5 figures, yo. When I'm setting up my business banking relationships, I'm doing at least couple thousand dollars per bank to really make an impact and improve my odds of my application. You're not doing that on a personal side. You got a direct deposit of $200 coming in. You got in and outflows of expenses on, coming in and out for $200 here and there. You set up a savings account with them with $500 to $1,000. You drop it in there and leave it in there for a little while. you look great in their eyes. You look good with a bank coming in and you stay stable and don't do anything crazy. 60 to 90 days in, you're in a pretty good place with that bank, especially if your personal credit is in a pretty good place. So that's another gift of personal credit card stacking that works in your advantage. So the next thing is the personal credit profile side. You still need to have a good personal credit profile for personal credit card stacking, right? Don't get it twisted. But it doesn't need to be as deep and extensive as it does on the business credit stacking side, like business credit card stacking side. You really need to have a really decent, deep credit profile on the business to go over to that business side and get decent limits. That means you have to have, a baseline of at least around 2 years of credit card history, really around $5,000 to $10,000 bare minimum in credit limits on the personal side to get reasonably comparable limits on the business side initially. So basically, whatever you got on the personal side is around the max starting point you're going to get on the business side, typically speaking. So if you need $50,000, $60,000, $70,000 in capital on the business side, you can't come into that with just $2,000 as the highest limit or $3,000 as the highest limit or even $5,000 on the personal side. You need $10,000 and $15,000 on limits on usually more than one card if you want a real shot at going at multiple banks on the business side brand new and getting $10,000 or $15,000 from them from 3 or 4 different banks to get to that $50,000+. Does that make sense? Is that making sense so far? Y'all, if y'all watching the replay or if you're on here live, let me know in the chat if I'm clicking with y'all so far, if it's clicking. JWD says Navy Federal is a quality institution for those who qualify. Absolutely. I just shot a really good video, JWD. If it's your first time tuning in, I just dropped it about a week ago and it did relatively well and got a lot of engagement about my Navy Federal journey and my personal success with my Navy Federal flagship card. If you get some time after this live stream or later on, check that video out. I just dropped it like a week ago. It did really well. A lot of engagement for that reason. And it's opened the door for great results for credit card stacking on the business side because I had such a great limit and a good history there. And of course, it opened me up to other institutions. All of that stacked up and looked polished for my business credit card applications when I went to stacking in the past years. So that's absolutely correct. Navy Federal is a great institution that gives you access to high limit credit funding, usually without documentation or ahead of a lot of headaches. So to get back on track, what does it look like? So you have some advantages on a personal credit card stacking side. You know that 30% is the max threshold to look decent on utilization. So you need to set up strong relationship banking across multiple institutions, but you can take smaller amounts of money to do this. That's the gift. You can do this at hundreds of dollars with these banks on the personal side at 60 to 90-day windows and look pretty good doing so. And that can open you up. You need to do it across more banks, but that can work out for you. You still can take the same strategy of applying by bureau on the personal side as you would on the business side. What does that mean? Horizontal stacking. What that means is Equifax, TransUnion, and Experian. And you've heard this strategy laid out by different, business funding experts and content creators. It's basically a concept where you take each bureau and I take a bank that pulls from each bureau. So one that pulls Equifax, one that pulls Experian, one that pulls TransUnion, and you line them up and you apply for each of them. And that way you only have a new inquiry per bureau, but now you've done 3 applications. Same concept applies on the personal credit side. So it's a benefit. Same thing applies, right? So you can take that same strategy, get yourself access to, 3 banks, or you really probably get away with maybe 6, because you can probably do 2 per bureau if you line it up properly, and mess around and get 6 banks. That is a good option on the personal side. You really want a minimum of about 4 or 5. On a business side, 2 to 4 has been pretty good. 3, 4 on the business side has been pretty good. You're probably looking to get around 4 to 6 on a personal side if you can get away with it successfully, if you do your sequences appropriately. So very important to understand that that's how you want to continue to sequence it. Now, what's another advantage of personal credit cards that is not as popular with business credit cards? Different underwriting buckets, because there's so many different personal credit cards at 0% and so many different bank options. Unlike on the business side, where it's so many collective, underwriting companies that are providing like the back end of the underwriting, like the Elon Financials of the world, for instance. A lot of these banks are not doing in-house underwriting unless they're like the really big juggernauts like the Chase and the BOAs. So personal credit cards also have an Elon-like equivalent where there's a group, there's hundreds of institutions all pulling from the same underwrite, all underwriting through the same entity. But there's still a much broader basket. You can go to your community bank and turn around and go to the big bank and then go to a super regional bank, and you can find these different level banks, and they will all be underwriting in-house or on their own time. And so that allows you to stack out a sequence that's broader. It's hard on a business credit card side. You get through your immediate top 5, top 10 popular institutions, and you start to find yourself drifting right back into a place where it's all being pulled from one bucket. I'm concerned about central bank digital coins, thus I stay away from I stay with quality credit unions. Yes, that's a whole nother conversation, JDW, around the whole central bank digital currency thing that's going on, and even how all of that's affecting the lending space. But what I want to say is that there's some significant benefits. Much more diverse card pool, easier relationship banking, easier underwriting, less scrutiny because it's not just you and a business entity at the same time, it's just you. Much more likely to stay no documentation, broader pool for the underwriting. It's less likely you'll find more diverse options of in-house underwriting. And again, if you're stuck down to 30 to 50% in utilization, I got a broader pool of cars to pick from. I can probably get approved for more cars in a shorter window of time than I can on the business side. I'm still getting to the point where I'm getting damn near a similar access point with capital, like a same bucket or pool of capital that I can use. You can still liquidate them the same at 0% for a nominal fee and keep the 0% benefits. I still recommend staying at that 30 to 50% ratio max. Now, let's be honest about some drawbacks. If you are looking risky on the personal credit card side, you risk credit card companies seeing massive fluctuations on your credit report because they're always tracking you and cutting your limits. That is a risk. Let's be honest. It's not all sunshine and rainbows. You do run the risk of looking risky because you have multiple credit cards that you're using at higher than normal levels, which is why you might want to ration it out more. Maybe you only do it with a couple cards out of the 4 or 5 you got. You do it with 2 or 3 of the highest limit ones or whatever you want to do. You might not be as aggressive because the personal credit side is really sensitive. The business credit card side does still have that advantage. It's just not as broad and deep as that advantage as it once was. But it is still, the personal credit side is risky. They're a lot more leery because they're not even expecting you to max those, like to hit those cards as hard and carry balances as long. That's not really what this is as anticipated on a personal side as it is on a business side, if that makes sense. So honestly, the timeline, underwriting, the relationship banking, the personal credit profile and score criteria, the underwriting pool, as far as the diversity of it on banks, a good bit of this stuff is leaning on the personal credit card stacking side for you to still capitalize your business and just get it off the ground, get it funded, and get it operational to get to the point where you can, it's documented and lendable to go back to these banks and get legitimate business funding again. But again, we all still are looking to scale up our finances. We're all still looking to, launch those businesses, take control of our freedom, take control of our finances, reach these wealth markers. We're not giving up on that. It's still an answer in this economic system. It's still the answer. Owning real estate, owning and operating businesses and entrepreneurship and side hustles, it's still the answer. So now that the fuel source behind that, which is the capital, the lending, the leverage, is either drying up or becoming harder to access, it's time to improvise. It's time to pivot. And that's where personal credit card stacking may turn out to be a good substitute or pivot or conjunction with business credit card stacking. I'm not saying business credit card stacking is gone yet, but it is definitely not as appealing as it was 2 to 3 years back. It's not at all, for sure. I can tell you firsthand using it, and I can tell you firsthand with clients that I'm working with, People are still seeing some success getting approved, but banks are definitely getting on people's backsides, especially when your application's online, by the way. The last thing I'll tell y'all on this is that banks are definitely, scrutinizing online applications more. Why? Because the fraud and the defaults are predominantly online applications. It's not that it doesn't happen in person, but it's a hell of a lot less common in person because it's being vetted by an actual banker. So banks are getting even heavier. I had a business client who I helped in person, got him approved for the card, and for whatever reasons, he had another business with us. He got overzealous and decided right within a few days of me assisting him perfectly with one business, he went to apply for another business credit card on another business that he had with the same institution on his own. And what happened when he did it with me? He got a clean break approval in like a 24-hour window of time. No additional docs requested, nothing. He applies online shortly after for another business. He has great financials, good business, he has good business relationship, he has good personal credit, all that, good revenues, but the bank's leery. So they asked him for his passport, documentation, the business formation docs, asked him for way more stuff. And so, like I told him, I said, listen, I don't mind you trying to exercise your autonomy. Maybe you didn't feel like you had the time to come back in the branch and work with me, whatever. You need to communicate with me. 9 out of 10 times, I could have helped you do the same thing as I did earlier and minimize the additional scrutiny. So banks are getting more leery about online application because clearly that's where the majority of your fraud and your illegitimate applications and your defaults are coming from. So I know this brought value to many of you. Hopefully it brought some additional clarity and gave you some insight on a good pivot point that you can take if you're running into the hardships that I laid out around business credit card stacking and working capital through that avenue. Personal credit cards can be either in conjunction or as a full out replacement can be a good alternative for you. So I just want you to keep that in mind. I wanted to shoot this live stream to give you that context. Things are changing. You got to stay on top of these things and these pivots because business lending is getting much tighter. And if that's the case, we still need to capitalize our businesses, new or existing. We still need capital. And if we got to take the risk and fluctuate things and flex things out and get more creative by infusing personal credit stacking into it, then we got to do what we got to do. So I want y'all to comment down below. Let me know in the chat before I close this out. If you have any questions, y'all leave y'all super chats if y'all looking for direct guidance. If you just got a comment, let me know. Chat that down below. Let me know your thoughts and the additional feedback. And let me know some of the value points that you got, some of the high points you got out of this as we wrap this up. For all of you catching the replay, comment down below and let me know what you think for sure. Let me know where you're at with your business. Let me know where you're at with your access to capital. Let me know if you've observed some of the challenges that I've talked about in this live stream. If you're looking to connect with me on Instagram, the link will be in the description down below once this live stream is all propped up and set up later on. And also a link in the description below to work with me one-to-one if you want a really personalized hand-holding, curated, guidance from a legitimate financial professional and expert that has well over 10, 12 years of experience in what we're talking about. If you want that opportunity to work with me one-to-one, comment down below, or once the video is all set up, get in the description down below. Any chats, any questions, before we get out of here for those watching it live. If you're watching the replay up to this point, comment down below. I'm very responsive in the comment section for sure. Anybody want to drop any additional super chats or anything like that for specific questions they have, insights they're looking for before we wrap this up? Y'all let me know. To say that this is so late and I shot this so late and off time, and man, it's good to see so many of y'all in the building. It was a pretty good turnout tonight. Any questions, comments, thoughts, feedback in the chat before y'all get out of here? Any questions? If you're watching the replay, any questions, any feedback, any comments, let me know in the comment section and I will be sure to respond to you. Let me know. Not seeing anything coming in yet. I know there's a little bit of a lag, so I'm gonna give y'all like one more second. Anybody got anything? All right, it looks like y'all got what y'all got out of this for the night. I appreciate every single one of y'all. My pioneers, welcome back. To my new viewers, welcome in. As always, on each and every one of you to stay focused, stay in motion. I'll see y'all soon.